Welcome back. Some really interesting food for thought there from the presentations. And we're going to focus now on investing in cities. There's a super panel coming up, but I just wanted to introduce Mark Holz, who's a group head of research at CORESTATE Capital Group. And Mark's just going to give us a kind of brief introduction, just in terms of some of the research and some thoughts around the sector. Mark.
Thank you, Richard. When your colleague Thorsten asked me to present on this topic, I said, sure, I'm happy to. But then I realized investing in cities is quite a broad topic. So I started thinking about where to start, and I decided to start with the ancient Roman Empire. Well, not really, but I wanted to provide a brief overview about the role of cities in general and start with a retrospective on the development of urban living and urbanization itself. And indeed, at the height of the Roman Empire, 20 to 30% of people already lived in cities. However, the modern way of city living really kicked off with the phase of industrialization during the 19th and 20th century. With the incredible boost in productivity, people moved in swarms out of the rural areas into the cities, which caused some stress for city planners because obviously, there was not much of a city planning law there. So this led to some chaotic, dangerous, and unhealthy circumstances in the cities. Nevertheless, people kept moving into the cities and embraced the new way of living. And during this period, the share of the German population, which I'm using as an example here, increased from around 5% to 28% in 1890. Now, this has continued to increase to a rate of 77% today. So that's roughly 3/4 of the German population living in cities. Now, I think that there are two incidences worth mentioning here. First, while I'm lacking detailed data, I find it quite astonishing that after the Second World War, where cities have largely been destroyed, there was a super fast renaissance of city life. People got back into the cities and rebuilt their cities and continued their life in the cities. And the second, that was during the 70s and 80s. Here, urbanization largely came to a halt and even decreased locally. This was due to technical progress and the mass availability of cars and the good access to public transport as well. And this caused a trend of suburbanization where people, particularly wealthy people, moved into the surroundings of cities. And this did cause some trouble for some cities. However, this pace had turned again, and for the last 30 years or so, there was a more rapid trend of urbanization again. But what does the future hold? Well, firstly, we have a global outlook from the UN saying that in the long run, you can expect the global share of people living in urban areas will make up 85%. So that's huge. But I think more importantly for us is probably the more immediate future. And interestingly, I think we now have a time that is sharing some similarities with the 70s and 80s. But now it's not cars and public transport, but the technology that is now broadly available, at least in the industrialized world, is the digital infrastructure that allows people to work from basically anywhere they want. So we have a similar but also a dissimilar situation because people clearly still do want to live in cities. In fact, this is probably, I think, the theme of the next years to come. It's a matter of choice. You are basically more free than ever to choose where you want to live. It does not necessarily have to be where your job is. And also companies are more free to set up their HQs where they choose. So in this context, it is probably the most attractive cities that will continue to attract residents and companies. Let's have a look at why cities have become so important and still are so important. Generally spoken, I think humanity has always thrived to find gains in efficiency. In the beginning, it was more efficient ways to satisfy basic needs like food or to defend themselves. And now the densities and diversities in cities is creating an immense efficiency to create arts and culture, for example. It stimulates knowledge and communication and cultural exchange. And cities also propel economic activity and innovation. And in fact, all these are very interconnected and kind of amplify each other. And therefore, cities are a place of power, of political power, of cultural and of economic power. And the latter, the economic power, is what I have displayed on this slide. The bars are indicating the share of the largest metropolises of each country's economic output and population. For the more polycentric countries like Germany, I've used the 4 cities of Berlin, Hamburg, Munich, and Frankfurt. And for the Netherlands, I've used Amsterdam and Rotterdam. For France and the UK, it's only Paris and London metropolitan regions. And what you can see here is that the major cities are responsible for an immense output of economic activity. A quarter to a third of GDP is generated in just 1 or 2 cities. In the highly polycentric Germany, it's 14%. And comparing this to the population living in the same area, this indicates the surplus of productivity in cities compared to the rest of the country. In fact, this is true for both for the current level, so for 2020 GDP, which is displayed in this chart, but also for growth, which tends to be stronger in the large metropolises than in the rest of the country, at least in the last 10 to 20 years. And being the economic centers, cities naturally attract investors' attention. And this is quite impressively displayed in these charts. I'm using the same breakdown of cities here that I used in the former chart, and those charts are showing the total real estate transaction volume in the metropolises versus the countries, making the city's importance for real estate investors extremely clear, I think. In all cases, more than half of a country's transaction volume is generated in just 1, 2, or 4 cities in the case of Germany. So I think most strikingly, looking at France here, where Paris is generating 78% of the country's total transaction volume. So why is this so? I think that there are 3 main reasons. First of all, in the cities, investors simply find the product that they seek. Secondly, property values are higher in the cities. So if a building in Paris sells, it creates a higher transaction volume than a similar building would generate in Lyon or Lille or Marseille. And thirdly, cities are very liquid and very international, so they have a specific investor profile. Generally spoken, cities, investors, universe is more international and also more institutional than the secondary markets, which tend to be more local and more private. Well, to some extent, this has changed over the last 10 years or so, and the secondary markets have also become more institutional, but still this is quite relevant, as can be seen from the data. Now, because of the international character of those markets, they can also be more volatile. I'm talking about the big metropolises now, in terms of activity. If there is a situation of global stress, like the one we are going through now, some investors simply refocus on their home turf, and that is sort of a burden for the larger metropolises in a down market. And this is actually something that is also reflected in performance and returns. For this chart, I'm using total returns for Germany, for German offices, divided into the top, into the tier 1 markets, as well as tier 2, tier 3, and tier 4. The general trend in this chart is very similar, but Tier 1 is clearly more volatile than Tier 2, 3, and Tier 4. In fact, looking at the 20-year averages indicated in the top left table, Tier 1 markets did outperform the other markets, but actually not by a large stretch. And generally, looking at those numbers from Tier 1 to Tier 4, those are very high numbers, indicating the strong performance in the German markets in this last cycle. But then looking at the second row here, looking just at the 10 strongest years of the last 20 years, that sort of paints a different picture, because here you clearly find a more pronounced difference between market tiers, with Tier 1 clearly outperforming. So the top markets are more volatile and more cyclical, and therefore timing is a very crucial component to investment success. So that's pretty much the present situation of the cities. Let's try and have a look at what the future might hold. I've chosen a picture here from SOM, which is an architectural collective, to highlight what the current idealistic view of the city of the future is. Very, very typical. These future cities are dense, very green, run by public transport. And what I like about this particular picture is the individual clusters that you can see. Those indicate a more localized approach with mixed-use neighborhoods, for example. And I think there are generally some common themes going forward, which I have collected on the left here. First, the smart city. And this actually goes into two directions. On the one hand, that is the digital connectivity of the city itself, collecting data and put that data to work to make it more efficient economically and environmentally, but also more convenient for its residents. Think of an intelligent parking system, for example. On the other hand, I think a city's role as a knowledge hub is very important. So R&D-led markets, research and development-led markets, with strong universities are in a very good position to thrive also going forward. And Vienna is a very good example of a leading smart city in Europe. The next theme here is the sustainable city. I think this is very clear and needs not a great deal of explanation. Buildings and cities need to become more sustainable, and they are. And there are leading examples in Europe, like Copenhagen, which is trying actually to become a carbon neutral city by 2025. Then the integrated city is a city where there is place for everybody. It needs to be accommodated for all age groups, for example. Remember that we have a demographic issue of aging, but also all social and income cohorts. Because typically, the more mixed a city is, the more its culture and its art scene thrives. And if you remember the three bubbles that I've highlighted going into the presentation, that is actually one of the key elements of an attractive, of a successful city. And lastly, mixed and dense cities, which go hand in hand with the sustainable cities, I think. And in fact, also this is going into two directions. First, the economic profile of the city. I think it helps long-term to have a highly, properly mixed business structure to be more defensive if a specific sector would struggle. And secondly, the functional mixture of work, life, entertainment, and leisure. An often quoted example here is the 15-minute city that, for example, Paris has declared a goal, but also Barcelona is adapting as a concept. So that is a neighborhood where you basically can reach anything you want within a 15-minute walk, which is connecting to the sustainable city. Now, do all cities need to be smart, sustainable, integrated, dense, and mixed to be successful? No, they don't. But thinking about the comments I made going into this presentation, that the future will likely be more of a matter of choice. Where do I want to live? Where do I want to work? I think cities that are in line with these points, with some of these points shown here, are probably in a very good position to continue to attract people and to continue to thrive. And with this, I want to end the short presentation and hand back to you, Richard. I hope this is opening up many questions for you, and I wish you a good time discussing with the panelists. Thank you very much.